These are dirty. Hello, everybody. Okay, that's better. Kind of. Not really. Alright. Gonna throw on Bloomberg real fast just to see if there's anything popping up. Yoink. Uh. Okay, let's jump in. Feel free to ask any questions if you'd like. Yesterday we did talk about. Yesterday was a pretty standard day. Like there was a lot of information and things got weak right before the open, which took Google off the table. Even though I still had an eye on it to potentially rebound. But MSOS was actually a really good play. Worked out pretty nicely. And had eyes on Rivian as well. It bounced off of this level again, pre-market. I got a little bit of a move out of it, but wasn't my best trade. Um, One thing that I'm going to be trying to do a little bit more is stay off of the really tiny time frames, and just use like the daily and the 30 minute to really try to 30 minute hourly. Don't have to really stick. Whichever one is a little bit more clear for me, I think makes sense. They're both very similar with extended hours off. So let's check out QQQ. I kind of dabbled up QQQ last night. I was looking at a few names. You can see that we're down again. We're hovering at the bottom again. Oh no, another gap down. Oh wait, yeah, another gap down. Wow, wow. Okay. Well, this one's interesting. We haven't had a gap. Well, we had a gap here to start the week, and after three, no, there was a gap down here too. So this is the second gap down. So this one's kind of a weird one because usually it's the third gap down that you want to be looking long. That's just a rule of thumb. Nothing concrete about it. But after a big drawdown, you get a gap down here. It is one of those things where it's slowly, and this is what the market does sometimes. You could have like an analysis, right? And it will just slowly bleed all the way down to where you think it's going to go. And you'd be like, oh, well, why didn't I get in on that? And you could say, well, I did sometimes, but I just sold. And it's not easy to be in like a position here where it's gap down open, and then we crack back over the regular trading hours low and feel confident that you're not going to, you know what I mean? Because there is always that worry of giving, something back. Like we said, it's very easily can just set a low at any point. So it's definitely difficult. You want to leave a runner, or you just don't worry about it too much, right? But it is once you get out of a trade, it's hard to get back in. That's for sure. So right off the jump, we have QQQ gap down open, which means once again QQQ leading the way down is not what bulls want to see. We've been talking about this all week. SPY is probably going to be weak. If it's holding up better, that means that XLF and XLV are going to be weaker. As you see that it's gapping down as well. I was thinking yesterday as I was reviewing, I was like, today could be one of those days where we see like a really red day. And the reason I say that is because something's got to give, right? It's either got to be QQQ bouncing and there being some rotation as money leaves XLF and XLV. Uh, then there could be QQQ bouncing and then XLF and XLV stay strong, which would mean all markets at the high of day at the same time, which would be bullish, very bullish. And then we could have XLF and XLV join a weak QQQ. And that to me is the most likely scenario uh, in regard to the complete opposite, which would be all sectors at the high of day, because once again, QQQ is one leading the way down. So I think because QQQ is leading the way down, now we're gapping down. Now it looks like maybe XLF and XLV are taking a little bit of a hit. It could be one of those days where all sectors have the lows and we get that big push down before we find some buyers. So let's dabble this one up real fast. And you can see with this close here that SPY has lost its daily uptrend officially. So it makes sense that SPY finally loses daily uptrend, then we have a gap down, then we have a swarm. So we'll check out where value was yesterday. As you can see here, value did move slightly lower. I mean, SPY's been holding up okay compared to QQQ, but now it's getting a little bit dicey. And once again, if you look down, it is a spot here where we're breaking this market structure. This little low right here, this little low right here. Once you break that low, it was just a stair step up. So it is a spot there where we have a lack of support. We lost EMA 12. So this is just a pitfall of where price should cut through pretty fast or can cut through pretty fast. We've talked about this before, which is like a karate chop through paper. That's what this should be. So if we do get the bears rolling here and we don't get to right around here and we get back into this structure, that could be a sign that the bears are still pretty dang weak. Let's check out XLV, which has been doing its best to hold the market this week. And you can see that it's not doing that bad. And we could zoom in here just to compare it to where it is within value. And you can see that it's actually hovering underneath the POC right above the value area low. Once again, there's not a lot of volume traded here pre-market, but you can see that what is available to us, it's not really positioned very well. But it's not the gap down that SPY and QQQ have. And now this is what somewhat alarming now too. So we have everything weakening. Okay, now once again it's only 7:30 and things can change. But once again, we have a gap down for XLF here, which is the financials, etc. So now we have 3 out of the 4 gapping down, and XLV once again not set up great as of right now. So once again that lean to seeing money leaving the market and things getting a little bit red today is presenting itself a little bit more pre-market, in my opinion. Once again, I am not a financial advisor. Bitcoin is trading sideways. We pretty much figured it'd be an inside bar this day, and then this was a bear wick with no follow through into a buyer's wick. So we'll see what happens there. And we can move on to the FANG names like we always do. Now, what we want to, if you're a bear right now, what you want to see with these FANG names is you really want to see a lot of weakness. You want to see Apple potentially gapping down as well. You don't want to see any of these big names like hovering over the POC and or hovering over the regular trading hours high. You don't want to see that. You want to see everything weak. You want to see everything low. Nothing sticking out. We talked about Google yesterday that it was on the table, but you could see that on the open for Google, and this is what's really important too, because I was looking long on Google, but if you look at the price here, when we actually opened underneath the POC, right around here. Let me just delete this. So you can see we opened underneath the POC, which I didn't like, right? So I wasn't really hell bent on jumping in on Google when the market was looking pretty weak in general, right? So we did trade sideways a long time, and then we finally got over it, and I was looking for potentially a play, but it didn't end up presenting itself. It got over it, and then just net couldn't really hold the POC. I was looking for a hold, and then maybe you know finally get something started there, but it just didn't work out that well. And then we just kind of cascaded. So as of right now, Google with a gap down open. Once again, not in love with this chart at all at this point. And I don't really, I'm not gonna be trading Google today. It'd have to be a lot for me to go long on Google today. It's just not on the menu, but we could see that it is a gap down as of right now. Apple had a nice little doji, but now we're at the lows. We're approaching 200 MA, and we are into these lows now a little bit. I mean, what's slow? I mean, the price is definitely going like big gap down and then slow grind down, slow grind down. But you can see, on the low side here. Once again, not really what bulls want to be seeing. Definitely with Apple. You've got Amazon here. Amazon rejected its alternative POC of this structure. This could have been a short play for sure. When you see something like this, we could just turn extended hours off. Makes a lot. So you have this bounce here, and this is the one thing that I really hate about like almost every video you see on YouTube is that they'll be like, "Oh well, look at this. You get a crack over the alternative POC on the daily, and then you get a pullback. So very easy trade. You get in on the break or even on the wick or the pass back over, right? You stick your stop above there, and then you're looking to get here and or the lows, whatever. Even regardless, it's 3 to 1 there. Okay, and you're like, oh yeah, great, 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 great. That makes a lot of sense. But what about right here? What about this rejection from this level here? You know what I mean? Like, that's a pretty big rejection. So that's the difference, right? Like, you can't necessarily like the reason you can get the what I would want to hear and what I'd be saying to you is that when you have a level here, when you're inside of this structure, there are plays when you have break above and failures and pass back overs because it's a spot there where we if you break over the POC and hold it, you would assume that price wants to get up here to the value area high. Okay, that's just the way price works. Now, the fact that we're looking for a lower high, okay, because we had this big push down. The fact that you have this lower high means that if you have that pass back over, you can get in aggressively there. Okay, here you don't have that pass back over. So you hit the top here and you reject, but nothing is really confirmed until you can break down, you can get a lower low, right? So the issue is that you missed these trades. which is like dink, and then it just hits, and then it comes all the way back down in that 30 minute. But I think the one thing that we have to realize that is that doesn't happen enough. It doesn't happen enough to have like a fear of missing out. So I think that what could happen sometimes is you can potentially get a break here and then put your stop up here and then look to get down here. The problem with that is that's just barely 1 to 1. So unfortunately, in trades like this, you're almost waiting for the bull break with no follow through into a pullback, which is kind of silly, right? Because in theory, when it holds like this, it's stronger than when it breaks and then fails. So that's the thing about trading that really bothers me is that nobody talks about this candle. They just see this candle and say, "Oh, the trade worked out great." But if you're live trading, like you might be tempted to take this candle here. It's a run up, and we could even zoom in. Let's say if you zoom in for clues, and I guess zooming in for clues helps too, right? So and it really can. So in this example, you have a level here. You have this little higher low. You break here. So it is a spot here. If you are zoomed in, you can absolutely get in on a break here. With a stop over the high. And then you can look down and get here. And you're getting 2.5 to 1, which is fine, right? Or if you want to wait for the market structure to break, let's say this market structure does break. You have pull down, you have the back test, then you get in, and then you have your stop above the level here. Right? But in this case here, if you're zoomed in for clues instead of just being zoomed out, you can see that we just hold this. It's basically an equilibrium, right? So we hold here bottom, a double bottom here essentially. We get up, we break to a new high, then we come back down, and then this is a spot here where you can see us hovering here. So this is a spot here where a few things can play a role. You could say, okay, well we're back under here and we're teetering. Okay, that's enough for me. Cross back over, boom, on the 30 minutes, a little bit easier to kind of digest what's going on. That's fine. Okay, then you could wait till we break structure, right? Have a solidifying candle here, a bit, a candle that has a little bit of spunk to it. You know what I mean? Breaking these lows here, which essentially is almost like a some sort of trend change. And in that example, you could see this candle get in, and then you could put your stop. I mean, I would put my stop here because if you put your stop up here, you're just not getting. You just, I mean, you have a nice little double top there. So I would do something like that, and you're, you know, almost getting a better entry. You can see it slowly teeters down. So that's the key about zooming in, and you can say, okay, well, what's the name of this trade? And you could say, well, if you go back to the daily, from a daily context, it doesn't really make much sense because we're trading within this structure. But from a day trade perspective, 30-minute hourly time frame, it's simply just we're looking for a lower high. We have a pass over the alternative POC with no follow through into a cross back over. That's it. Because we're basically saying if we break the POC and fail to hold above it and cross back over, we're going to take that as market weakness and we're going to look to get back down here. And you can do the same thing up here. If we have a bull break here with no follow through into a pullback, you can make a case to go back around here. And if we get the higher low and you get back down here and you break here with no follow through and you crack back open, you can get to go back here. I mean, those are the trades that are available. So I think that makes sense. And, understanding that and then looking for clues does help as you're watching price. And you probably want to have both of these up, honestly. You probably want to have both of these up. That way you don't confuse yourself. Because if you're staring at the same thing long enough, your brain just kind of is very good at just forgetting that what exactly is going on there, right? So if you have that and you have that, you gotta wait. I mean, you could get in here as an aggressive, as a super aggressive trader here, but this breaking here is no guarantee. All right, let's continue. Nvidia. I can't see. There's too much stuff going on in Nvidia. Nvidia is actually holding up pretty well. Here's a good. Here's a really good. It's a really good example for Nvidia. Get rid of all this other stuff, and you could say, okay, we're looking for a 30-minute higher low. Off EMA 12, we break below, crack back over. Okay. So let's say you get in here with a stop under here, and you're looking to get back to the highs here. Well, this case doesn't work out, right? It doesn't work out. You get to around here, and then you start equilibrium, and then you break bearish. Okay? So at the spot here where, once again, when you set this lower high, set this higher low, and this lower high, you could start to sell a little bit here, but you have to remember that the overall market was weak, right? The reason why this didn't get here was because QQQ and SPY and all those other names were pretty dang weak. So at the spot there where if the market was stronger or found a bottom, this would have made it here easily and probably even further up because it was a strong name. So that's also important to understand that you want the wind at your sails, you know what I mean? And once again, the key here is that we're looking for a higher low. We're not looking for a lower high as well. As played, we're still into structure, and we've been really tossing and turning around. It was alarming that we were holding, we broke beneath it. Bears couldn't get more follow through, which they really should have. Definitely here. If you look at this candle, let's get rid of all this crap. You see, we're trading sideways here. But before that even happened, we had the sideways and this little bit break right here. I mean, this should have been a bear break into lower lows. And the bears just couldn't get any follow through. So then the bulls took over, sliced all the way back through. And if you're aggressive enough, if you think the momentum is aggressive enough and you get over this alternative POC, we talked about it before. Where does price want to go to when it gets over the POC? It wants to get to the Valley Area high. So if you want to be aggressive, you could get in there if you think that the momentum is strong enough. That's a momentum play. It's not a high or low type play. But as you see, we're breaking down here, and it'd be interesting to see if we could break the lows here and try to get back down to the structure. And you can see that this could very easily be a quick daily lower high here. I'm personally not convinced yet, but it is a spot there where this could be the daily lower high setting up here. But I think that I would need to see something like a break, a failure, and then maybe something like a break, a back into it, correct back under, and then maybe and then make a play right around there to look for the daily lower high being set, and then looking for further weekly consolidation. But I'm not sold on that either. Tesla, everybody's favorite Tesla. Inside bar. We know how this goes, and we could zoom in. It's the same thing right here. Let's check it out. Zoom into the 30-minute. We broke back in here. We didn't quite get to the alternative POC. Came back and we touched the value area low. Bulls, a value area high. Bulls held. So nice defense there. And we can even zoom in even further and say, hey, it was when we got up here, was it being supported? No. Look at that. So when we got up here, you could see that the POC, the Deepak wasn't supporting price here up top. Which means what? Which means that it's not a situation where we have a bunch of buyers that are in euphoric mindset that are just like hitting the bid. It's more so a lack of sellers. And don't get it twisted. They could both lead to price going higher, and it doesn't necessarily mean that price is going to fade back down. But if you're saying, hey, I'm looking to short this area up here, this the valley area high on this daily level. If you're looking to short this area and you see that the developing POC is not supporting this move up, you can say to yourself, okay, if I see something that I feel is, worth jumping in short, I'm going to take that opportunity. And you can see when zoomed in here that there were two different opportunities. The first one was just essentially a triple top here. Okay, struggle to get above here, and that could be enough for a person to get in. You can see the triple top with this nice bearish candle, which is another opportunity to get in. Or you could get in on this 3 minute or 2 minute, whichever price side time frame you're looking at, and get on this higher low. And in that sense, you get in on the break of that candle, and you put your stop above here. I mean, you can put your stop above here, but once again, that's up to the trader. I think they're both fine. But I do think that there is enough here with four tops to be putting it up around here with a little bit of wiggle room. That way you could really gun for that 2 to 1. Or at least that 1 to 1 chop, and then you could let the rest ride. And you could say, well, if we reject from here, Paul, where does price want to get to? And you could just cut out all this noise, right? Cut out all the noise and say, if we reject here, price wants to get one, back down to the lows, and then two, back down to the alternative POC. That's simple. So you're holding there, and then you can reevaluate. And you could say, well, Paul, it wasn't a lower high here. Well, you're right. It wasn't a lower high. But at the same time, there wasn't anything convincing from a bull's perspective either. Like, yeah, we had this little higher high, but it didn't really get much going here. As for getting the higher high, once again, we're in structure, so trends matter less. And then once again, we confirmed it with the price not being validated. And if you just want to just look for a pattern trader, you can take this head and shoulders. And you don't have to wait for this candle. You could essentially just scale in here. You could say, all right, well, I'm gonna get in on 50% fib, and I'm gonna get on here, and then I'm gonna stick my stop up there. So essentially, what you're saying is that your median average would be right around there with two scale-ins. You put your spot over there, and let's say you're looking for 2 to 1, and there you go. No need to hold. But once again, if you're looking big picture, you're looking way down here at the low, and then even more so. And at this point, if you're a boss, you're at 6 to 1 already. Those are the plays. You just have to have really. You just have a lot of confidence in your your orange levels, which is daily levels here, and just putting it all together. All right. Well, as for today, are we gapping down? I think we are gapping down here on Tesla. We are gapping down. So inside bar bear break. The first support level is going to be right here, and then the alternative POC, and then the valley area low, and so on and so forth. It was interesting that bears could not get to the fill the gap here, and then we bounced really well. We got up to this level. We failed to get to the POC, came crashing down, and it's been all bears ever since. I think that there'd be some sort of bull action around the POC. I mean, I'm definitely interested in Tesla today, but I'm a little bit worried about the structure just getting like absolutely cut through here. I mean, the Bears. Bull. This is Bulls trying to put up a fight here. This is what this is. This inside bar is Bulls saying, "Okay, enough is enough," and then now we have a gap down. What does that tell you? That tells you that the pre-market. That tells me that the pre-market selling right now is pretty strong in not only Tesla but the overall market. And I would need to see the bulls back over the regular trading hours low, just to be convinced at all. So with Tesla, if I'm looking long here, I'm looking for this to be essentially a pass down failure of some sort. Pass back over the open. It's still not going to be enough for me to go long. I need to see a break over the regular trading hours low, and then I need to see a hold. So if I can get like a some sort of EQ over the regular trading hours low, that might be a spot where I could think about going long or something like that. Because that would show me that bulls have completed the first task that I wanted to see. Then they are accomplishing what would be playing defense at a very important level, and I'm saying to myself, okay, because we've gone down so much, and once again the for the second day in a row the Bears look like they're somewhat getting tired. I could look for an opportunity to go long. But as of right now, it's not looking too good. And you can say, well, why don't you look long? Why don't you look short today? Well, I mean, like, yeah, right. I don't think there's enough meat left on the bones on some of those names. Like NVDA is holding up much better than the rest of the market. So it's like, why would I pick that name to go short, right? Tesla has gone down for One, two, three, four, five, 6 days in a row. Now I want to look short. Yuck. Maybe the names that haven't really gone down yet, like Microsoft. Microsoft might be a good play. We had an inside bar yesterday, rejection from the highs, and then we closed at the lows here. We are not gapping down. And it is still in a sideways range. I mean, you really don't want to be trading in a sideways range, though. But these are the two levels that are the most important, and if we get past those levels, it's all she wrote. I've been watching these a lot lately, like these structures, and what happens a lot of the time is you get you essentially get the triple bottom, then you get like a little teeter, then you get a bear break, you get a push back up, and then you get the ride down. So it's like they stop everybody out before they go up. A great example of that would be Rivian yesterday. I'll give you a quick example real fast on a small time frame. I should have had this trade, but I knew this structure was I knew this was at the demand level, and I just wasn't confident enough to like short off of like into the demand level. But you can see that the Bears did prove it enough where Bros were like, all right, we're gonna let this slide. Screw it. This is not gonna happen for us today. But here is the example. So you can see we had a bottom here, we teetered here, kind of broke with no follow through. Okay, so there's a one, two, three. You can call this to one, two, three, a bear break, no follow through, back up to the high, battling the open here, and then you have another bear break here with some follow through. So maybe you're like, oh, did I miss out on the trade here? And then you have this big move up. No, not a lot of volume though. This big move up, a high. You have another low, like another with a wick inside bar, bear break, no follow through. I mean, this is what happens when um, it's a really tiny time frame, and then this is what happens when like they just want to fuck with everybody before a big move. Because if you're just looking for that trigger, because what a lot of traders are doing are looking for that trigger, and so was I. And I just kept seeing all this, and I was like, I just don't have the confidence to get in here. And then on top of that, you could make a case that this is some sort of like, right? You can make a case that this is a some sort of channel, which it was. It was definitely a channel, and it's a bullish channel because it's a channel that's kind of teetering down. So you would make a sense that it's likely to break in this direction. But once again, this is why I don't love. Not the biggest fan of patterns anymore because I just feel like they get you in so much fucking trouble. Um, but you can see here, lower low. So this is the play here, and you just have to like ignore everything else, right? So if you're looking bearish here, you get the bear break that we talk about of this level, bear break of this level. You get the pop above, and then you could say when you get the crack back underneath it, this is just your trade, like you're right here. Or at this, or honestly, you could just stick it above the open. But if that's the case, you should have already been in it up here, I guess. I mean, look at all these tops. If you have two tops here, and then you have this top with another rejection, you could say, okay, that's enough for me to go short, and you just put your stop here. And this is what I should have done. And we knew this was a value zone. So once again, but we're inside of value, right? We're inside of this box. So you could say, I want to look at the alternative POC for sure, because that's where we bounced off of here. That was the trade I took here. This is the trade I took here. Failure to get to the value area low, and we had the gap fill, crack back over And you want to see when you're on a tiny time frame, you want to see a little bit more. If you're on a 30 minute, it's a little bit clearer. But crack back over, put your stop into low. In the first level was right here. I tried to let it run a little bit. I got to around here before I said, what was it? Right around here before I said, all right, I had enough. Um, I think it might have been on like some sort of 2 minute stair step or something. I'm not sure. But then you see we come back, we hold it again. I believe that was the trade I had yesterday. So I had this trade. I had this trade again. I didn't love it. I actually got a really bad fill up here. The trade is supposed to be an aggressive bottom fish of this level, and I got in up here, which was pretty stupid. But it ended up working out. Ended up selling up around here at this structure here. I tried to hold it, but it just didn't. I just saw the battle here, and price wasn't being. This is what made me sell honestly, was the fact that, and I was using this early, was that we had this big run up. We had this nice little higher low right off the value area high with bull follow through, and it just wasn't being supported. So when I saw that we have levels here, and I knew that we were still, obviously bearish, looking for potential hourly lower highs, and we got the break of this candle. I jumped out. This could have been a short. Look at price not supporting the level as it gets back up here off the POC from previous day. That's a nice little short, and then he just teeters all the way down. So and I knew right, Rivian was short, was not set up for the bulls, but would have been a nice play. See what it looks like now. This is an 8 a.m. wick. This doesn't mean anything. But you can see if you say to yourself, okay, I'm in here, and the alternative POC has already been tested twice, so I'm okay with letting that one try to break. So then where would you want to be looking for? You want to be looking for down here. Let's continue. Microsoft. I love where this I love this right here. If it can, I mean, it's gonna take a lot to get down here, but if it does, look what it's line 200 MA right up against this level here. But this trade was missed. You could see that we actually had a gap up here and just selling, and then that was the play. Very hard to get into a trade when you see all this volume here, but that's the way the trade works. You'd want to see a hold, and you'd want to see some sort of pushback out. I think this hold here on this candle, and then this day here would have been a really good long. You just have to be on it every fucking day. You have to be on. No days off. Meta is a really nice one today. I have eyes on Meta today, for sure. Let's line up the value. But you could be frustrated at yourself and say, man, like, a lot of these names, the value was going down. The market was weak. Why didn't I just go short? Well, because you were just expecting the daily higher low. You're expecting the daily higher low. You're expecting the daily higher low. And that's what happens to me quite a bit, a lot too, is that like you're always expecting the bounce that you never get what's right in front of your face. And that's kind of like life, right? You're always thinking a day ahead. You're always thinking a week ahead. You're always thinking about whatever or the past, and you're not thinking about the now. And that's a good analogy for stocks. Is that like what's in front of you for that day? Like don't imagine things that aren't there. Don't present anxieties that aren't there. If value's going down, you know, like Tesla's a great example. If their criteria matches, then hit the sell. It doesn't always have to be hitting the sell on the AM. It just means that like, hey, I'm still looking bearish. But we have this was Tuesday. This was Friday. So Tuesday held up well, and you could say, oh well, if we break the high, we're gonna set a daily high or low here. But we opened down here. Okay, we opened down here, so we have that little pop and drop. And I remember thinking I wanted to go short on Tesla here. I just wasn't sure of how aggressive I wanted to be. But it was a spot there where we opened slightly above the regular trading hours low from previous day. You had the pop, the failure to get to the value area low, pop back under, and that's enough to go short. And you look for the regular trading hours low, and then you look for the value area low here, or this value area high. If you can crack through that, then you want to get down here. And there's a little gap fill here as well that you could have taken profit at. And then even here, when you're inside here, you say, oh well, daily high or low potentially going to be set here. We're opening right around here. What am I thinking? And you're thinking to yourself, okay, well, where is the real resistance here within this structure? Well, it's up here. It's the value area high. Right? And we just talked about it. We talked about it on Nvidia, right? Let's see what it looked like on this name. This wasn't the same name, was it? I mean, wasn't Nvidia like this, or was this? Did we do the Tesla example? Because God, this looks very similar. Yeah, it had to have been that, right? Well, let's say it wasn't. So, and here's the thing: you have to be okay with missing the move. That's like we talked about this before, where Dan talked about a superpower here. You have to be okay with missing the move, because right here, if you get this push up and you don't quite get up here, and then you break the low, but you don't break the low of pre-market. So that's the big move, right? So the bulls step in right here at the low pre-market. And you could be saying, oh, this could be the daily high or low. And that's where your brain gets ahead of you. Oh, this could be the double bottom here. This could be a daily high or low. Well, guess what? You're jumping so far ahead of yourself by doing that. As we know, no real change happens until the bulls break the high of the regular trading hours high of previous day. So even if they break the high of the high of day, it's not the regular trading hours high. They have a ton of work to do. Okay, and then maybe you could start thinking that way. As for now, double bottom here. The bull's job is to get back up here. Do they get there? They try to teeter. They fail a little bit. But once again, we're in structure here. It's all about context. And this is something that I struggle with as well, because I might be looking for a short here. I'll failure to get to here. But here's where it helps. Because look at the Deepak. Deepak is supporting the move. Deepak is supporting this move, which makes you less likely to jump in, which is why I'm glad I found this. So I get to move up. Boom. You don't quite get up here. And you can say to yourself, okay, well, triple top here. Not being supported. Could you go short here? Sure, you could go short here. But once again, what's going to say you're wrong here? And I think this is where scaling in helps, and something that I do not do. But you want to have it up here with a little bit of wiggle room, right? So maybe you put it up. And I don't want to say just like, oh, because this is here. Obviously, it's a little bit of a bias. But let's say you're willing to, you want 2 to 1 on the trade, right? So let's say we reject here, we want to get back to the low. At what point do we get 2 to 1 here? Okay, there you go. So if you want 2 to 1 in this trade, if you get it on the break of this candle here, if you have your stop up here, you're getting 2 to 1 on this trade. And that's what you're really gunning for, right? 2 to 1, 3 to 1. Because if we do reject from here, where do you want to get back to? You probably want to get back to at least the lows. But if the overall structure, you want to get back to the alternative POC. So you always have to remember why you're in the trade in the first place. This is also a spot here where if you're looking at, the situation here, it is looking for a higher low compared to the structure. But once again, that's not the end all be all because we are inside structure, so it's not the end all be all. If we look at let's look at the 30-minute and see if anything, because we want to have that up as well. Come on. To extend the hours off. Okay, so I mean that's a lot clearer, isn't it? That makes life a lot easier, don't it? You're looking at this level to reject. This level does reject, but once again, you don't get the confirmation. Now, do you always need a confirmation? No, but some people like confirmation. It makes them feel better. I'm one of those people. So here you go. There's your trade. Back down to the low. Do you get a clean 2 to 1 here? Nope. But let's say that's what you're looking for here. 30-minute, 3-minute as well. You want to make sure that the Deepak is not supporting the move. It is not. And then there you go. And like at the same time too, I think it was Nvidia that did this, but not 100% sure, but it is the same thing. And there's your and there's nothing wrong with doing that. Get near. What's up above there? There's your 3 to 1. Right? So if you can zoom in, if you have an idea of what you want to do, and you zoom in for those clues, sometimes things do present themselves. My problem is I live on those smaller time frames too much. Live on them. Not smart. So Meta is holding up well. Meta, I mean, you have to. It's very hard not to like Meta here. I mean, everything is just kind of making sense here. You have an hour. You have a daily high or low scout. You get back down to the structure, which was developed here. You had a bear break, so bears were in control. Bull stepped in here. There was a battle here. You can see there was a little bit of battle here. Double top at the alternative POC on the daily. We crack over it with authority. This could have been a nice momentum play. Get back up. And now where do we bounce off of? We bounce off at exactly where the momentum basically took off. Now we have an inside bar, which is bears trying to stop things. We have a double inside bar. And now we have a situation where we're holding up slightly better than a lot of the other names here. And if it's one of those names where we do have a gap down for buying, Meta is going to be one of those names that are set up much better. And you can say, well, what's the final piece of the puzzle, Paul? You could say, well, you can say that did are we trading with value? And you could say that technically no, because we traded within the same um, perimeters here, but it's not lower. So it's better than lower. Okay. Oh no, that was this day. My apologies. No, we traded higher yesterday. Value trades, and this you could even make a case that this is a P profile. We shoot up. Bears try to push price down. They cannot, and they hold. This could be a potential P profile. I'm gonna label it a P profile, but price is down here now, not opening great. So my lead bull would be Meta. I'm looking at Meta today for a bull play. Damn, I'm hungry. I need to eat real fast. This banana's not quite ripe yet. I'm gonna mute. Not good. That shit is not ripe yet. God damn it. All right, so we want to write these we want to write these down. Let's look at financial juice as well, just to make sure that there's nothing big going on today. We have U.S. non-farm payrolls at 8:30. We have more U.S. factory, so we have 10 a.m. stuff as well. And that's that. On January 6th, a spot Bitcoin ETF decision. That's going to be tomorrow. Of course, it's on a Saturday. That's funny. Oh no, it's a bunch of days. Jeez. All right, so we want Meta. Meta is definitely going to be a bull play. And you could say, well, where do we want to get to if we could break over that level here? Well, I think that we want to make sure that we're paying attention to both highs of previous candles and point of controls. So there's a confluence of levels here, and you can see that we actually hit this V. This is not a they call it a naked. They call it a virgin. It's such a creepy fucking name. A non-violated uh, POC, and you can see this one is. This one's violated. This one is the only one that's not violated. So that would be a level. We can go to the 30 minute and look for clues as well. Yeah, and you could see. I mean, little higher low is set here. So this is definitely a spot where you could look to take off some. We could even run a profile through it. Yeah, look at that, and it lines up perfectly with that. So this is an area of definitely where you'd want to be somewhat cautious. And even if we got in on the bull break here with the stop, I don't know, let's say under the POC, you're rocking like a 3 or 4 to 1. So meta, double inside bar. We're only looking bull because there are better bears out there. Only looking bull. Only looking bull if QQQ bounces. All right, so we went through the Fang names. I wonder we have to go. We'll have to go through the Fang names again once this 8:30 passes. But let's dive into some of these other names that I was looking at yesterday. To see how they're opening. Nope, that's not it. Okay, eBay. Was I looking at eBay yesterday? So eBay had this really tight pattern that we broke bear from. So if you have this tight pattern and it breaks bear from it, then what does that tell you? That tells you that there was a battle going on here. Okay, there's your battle. And it was also at the 200 MA. So there's your battle. I noticed this stock is the liquidity on this stock is garbage, I believe, but maybe it's changed. So now you have this bear break, and where does price want to get down to? We lost to EMA 12. Let's see if there's any other EMAs. Yeah, there's one down here. But look at the 30-minute time frame here. Actually, let's look at the hourly first. So where does price want to get down to? If you look at this chart here, well, it gets really choppy here, and it looks like we had this little inside bar bear break with no follow through into a bull move. We held here. I mean, it's really there's really nothing clear. There's really nothing clear. So I would say that, and I marked this last night, probably underneath this level here. There's definitely a lot of tops here too. So maybe something in this range. And we could also go here and look to see if there's anything that stands out. Okay, well, there's a node right here. There's a pretty big node right here. So somewhere in this region. Now, are we just going to hop into this trade? The answer is no, if we were looking short. What we'd want to see here is we'd zoom in and we'd try to look for some sort of lower high. Now that we officially have this break of structure. And we're actually opening at the lows here. So this actually isn't a bad candidate to like just shoot short here. The problem with doing that is that there's just not enough meat on the bone. Value moved lower here. I mean, you don't always need a lower high. You really don't always need a lower high. We're not going to trade this one, but I'm going to use this as a studying tool. Because it's this one's not clicking for me, but I definitely want to see how this plays out because either I can just look for the pop and the pass back under the open and try to get that meat, or wait for like a 30-minute move as we are teetering slightly above the under the POC. So maybe, and the other POC is way up here though too, but you can see that there's like, I mean, this was a move to definitely take like right here after the bear break. You can see that we broke the structure, and then you saw that we had this inside bar bull brick with no follow through, and you could say that once you get that rejection here with the spot there where you could essentially do something like this, but you're just not getting much there. Like you're getting a 1-to-1. So yeah, because you could like in hindsight you could obviously be like, oh hey, hit there, I'm in. You know what I mean? But like, let's be honest, like this could have gone up here, 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 and you don't get the trigger until the very next candle. I mean, you could say that okay, this is either the 30-minute. I mean, Dan does this sometimes too. It's like this is either the 30-minute lower high, which is a very fast one. So you get in here, you put your stop there, and then you get some follow through. But that's mentally that's very hard to do while the lights are on. So the play could be, to get back up to somewhere in this region here. You're looking for a lower high. You could wait for the confirmation of the candle, or you can zoom in and look for some sort of, head and shoulders double, some sort of tops being made. And then you also want to see, for the most part, price not being validated by the Deepak. So we'll keep an eye on that one. Hut is another one I was looking at. I know Dan said in his video that he was potentially looking short for daily lower highs on a few names. I probably won't play these names today because they're small cap and they tend to get me in trouble. Um, so I probably won't be playing this one today. With that being said, do I just want to run from my demons? No. Let's take a look. What is presented to us? So things that we like. This is another great example from yesterday. This would have been a nice play yesterday. And you have the 200 MA as support. But check it out. We talked about this play a few times already. You have the open. You have the crack underneath. Failure to get to the POC. And then a pop back over. It should have got. There's no reason why it shouldn't have got to the POC. So the fact that it's back over, that could be an aggressive buy with a stop underneath the low. And you'd be looking to, I don't know, fill the gap here. It's 2-to-1. Could be looking to get to the low of this candle. It's 3-to-1. Same trade. As played, not much of a bounce here. You get the higher high with no follow through. EMA 12 is up here, kind of sandwiching here. And it makes sense that it's kind of sandwiching here. There might be like a lot of people just not really doing much because why would you make a position on a Friday when we have that thing tomorrow morning? So I'm actually not even going to be playing this name. Wayfair. I like Wayfair for a bounce potentially. Why? Well, we're bouncing off of EMA 12, the 200 MA. We're back in this structure here. And are we trading with? I believe we were trading with value. Let me double check that. We might be trading with value today. Yes, we are. So we're down a little bit pre-market. The POC was a little bit higher up of on the range, so that's it. You know, it's still opening somewhat strong. As you can see, the profile is looks like this. But we're trading with value now. It's actually kind of all over the place, but it's good enough for me. We're looking for a potential bounce here off of structure here. We're not looking for much of a bounce. But this is one of those. This is the setup of as simple as open, crack under the crack under, no follow through type of deal. I'd like to think like these plays are better when you're looking for a higher low. So I'm not sure. Like they're always better when you're looking for a higher low. This one we are kind of looking for a higher low, but it's a little bit different. I think the thing that makes this different is that we are essentially, I mean, this whole thing is like structure. Sometimes I just continue to talk myself out of trades though, which I don't love. I just and I've never traded where this name before. I mean, it moves pretty good. It's a 6% move yesterday. Hmm. I don't know what the spread is like either early on. Let's see what it trades. 4 million, 5 million. Okay, it's got enough liquidity. Looks like it. Anyways, above a million is fine. It's just with the bounce we have to have some sort of expectation. Most likely the scenario is going to be a daily low or high. So EMA 12 is not a bad level. I mean, that's 6%. Monster inside bar. Ford continuing to teeter. Gap down on Ford. Spy gapping down even further now. Whoa. Why is PLTR down so much? 4%. Wow. It's getting to an interesting level here, but it'd be very aggressive. Here's another one of those trades. I think I took this trade. Crack under the POC. Big gap down. We had this huge move up on earnings. We talked about PLT short on Tuesday here, but actually we talked about it over the weekend. And then we had this gap down, and I just could have been a very easy play. Just an aggressive entry, but it was the first day back after a long layoff, so it was just hard to have that mentality. Still looking for DraftKings to get down here somewhere. Oh, I haven't looked at MSOS today. MSOS worked great yesterday. Just look at this, the setup here, which was right here. First of all, it was kind of like a P profile, but you have the open, you have the pullback, you have the crackback over the open, and there's your entry. And it's also a crackback over the POC, which you love. Whatever you want it to look like doesn't matter. Anyways, something like this. And then you had a few resistance levels. You had one here, and you had one up here. I actually sold pretty close to the top here. I'm not sure if why. I think I sold because I was nervous about this. I was nervous of two reasons. The first one was because the market was um, weak. Overall market was weak, and then also because once we had this, so we were trading sideways and we had this big move up, and then we're just kind of trading sideways here. And for me, because we had this big kick in volume here, and it just wasn't being supported. Like I have to continue to watch this. You know what I mean? Um, but I wasn't sure if this meant this like flat line here just wasn't supporting this move up. You know what I mean? Because it looked like it was supporting the sideways, and then it looked like it actually supported this move up. So maybe I was wrong to sell there. But even when it got back up here, like I sold up here, and then it pulled back. But even when it got back up here, this is when it's a little bit different, right? Because now we pulled back down here. Bulls find a base here, and then we're just kind of moving up here, and it's not moving from this spot here. And I'm trying to one thing I just started using this not too long ago, but I think that when you get the move up, it tells you two things. It tells you that remember this is the development POC, which is the fairest place to do business, which is the most volume was traded in this period of the day. So, you know, when you get up like this and you see this move up, this is now the area where the most volume on the day was traded. So you could see that it was supporting price right from this point on. So I probably read that wrong. Um, in my defense, the broader market was very weak, and there was resistance there. So just because it is supporting it, it can still mean that there's strong sellers, and I think that is what ended up happening, right? I kind of had it backwards where price was supporting, so this big move up, which led to this price being supported by the Depop, which means like right now, right here, this was the most volume traded on the day, and you have that little stair step up, which is what you want to see. But you get to this resistance level and you get rejected here. Okay, so what does that tell you? If price is supporting the move up and there's volume there, what does that tell you? That tells you there's a lot of there's strong sellers here, right? So when you come back here and then you get up here again, and once again, there's really not much. Look at the fade of volume here. I mean, it's underneath the average. Like look at this compared to this. Look at this compared to this. So there's no, and even though it's a little uptick from a size standpoint, it's definitely decreasing, right? What, right? So when you get back up here, it's a spot where you have a little bit of a stair step. It's actually a really good short. I mean, you're shorting a strong stock, but you have reasons to do so, and maybe you just want to get back down to the lows here. It's a nice little 4-to-1 banger. That's why I like this. So I was wrong about here because this is supporting the price because this is where the volume came in. Boop. It's just not going to go up every time. So this is where the volume came in. This is where you want the most volume traded right here. Like that would make the most sense, right? If it makes sense, then obviously. If it was down here, if this move happened and it was still down here, then you would be worried about that move. And you could also see that when we broke through this level again, cascaded down. And it wasn't even a bad back test there. Okay, well, there you go. So we've done all this analysis and all this fun stuff, and we still don't have any shorts. We have one long. All right, let's go through the fangs one more time. Actually, let's go through the indices one more. We'll go through the indices one more time. We'll go through the fangs one more time, and then I'm gonna get off. QQQ, big gap down. SPY, gap down. XLV, getting close. XLF, gap down. IWM, gap down. Bitcoin holding okay. I would be looking long when I would have the long played out when everything in the mother is looking weak, and I even predicted a bear day, like a potential really bad bear day. Google, gap down. I mean, Google might be a good short here. Google was looking good and now it's not. It has all this room down. You go from liking a stock to hating a stock real fast. All right, let's close at the lows. This is exact. I mean, you close the lows. It's exactly what you would expect. Is a gap down. And there is just. I mean, we could confirm it here with. Is there anything there? If we get rid of all that, if we just do this, is there anything there? There's a little bit of a node here. Stemming from what? Don't know. But should get pretty far down. Man, oh man. How did this profile get the P down here? Was it the beginning of the day? How did a volume profile? Okay, I guess it was just the very end of the day. It's always weird when it does that. I mean, that could literally be your play. Back test of the POC. Where's the overnight low? We don't want it to be the 8th. Okay, yeah. That's fine. And here's the overnight high. So Google has a lot of room to just run down. And if we're looking for some sort of it's funny how the profile here is different than the profile when we're rocking the 5 minute chart. That means there's only one real way to do it to see who's right and see who's wrong. Gotta do it this way. 9:30 down to here, and whoever is right is right. All right, the 5 minute was right. That's the way it's supposed to be. That's the best way to double check. Which lines up very similar to the overnight high. You just don't want to pick a level. Like, here's the thing: you want to have a level, but you also want to have like a zone and a reason why. I sometimes fall into the trap of just picking a level, say, "Oh, I'm gonna go short off there," and then I'm like, when it times to come to fire, I just don't have it because it's just not. It's just I'm picking a level. Like it could, maybe it should, but doesn't mean it's going to. right? So if we're down here right now, and we had to pick a level here to go off of, just using these structures here. You see that we had to move down here. We had the low before we fired off. Came back down. Teetered off this area here. Broke through. Teetered again off of this area here. Broke through. So I guess you just want to be playing it off the overnight high. You don't want to see the bulls break the overnight high. Let's have this death cross. Is this the first gap down? Tuesday, bull break with no follow through. This could be a quick day. I mean, I don't know if you can call this a daily low or high. Some people will. It's tough. This is when you need somebody else to talk to. Somebody else to game plan with. Alright, so we're going to keep Google. Let's duplicate the tab here. Apple is not gapping down. That's interesting. And you could say, oh, well, will Apple hold the lows? I mean, you could make an alarm here, but at the same time, you really want to. It could break with no follow through, too, so you kind of want to keep an eye on Apple. I'm actually going to keep Apple over here where we were at the Fang still. Go Amazon. We talked about Amazon here. Amazon had the break with no follow through into a pullback. No gap down at the moment here. Price wants to get down here for sure. Still in this zone. I mean, Nvidia is the one that looks like it could just set this quick. I mean, well, technically, I'm wrong because technically, this was the daily lower high and lower low. So this was just losing the daily trend. So this is just would be another. I mean, we bounce off of the EMA 12. So this isn't like a quick daily lower high being set. I mean, it could be another daily lower high, but not the daily. We already lost the daily trend, so it's not as significant in my opinion. Even though figuring that we would bounce this much and then come all the way back down is a little bit alarming. And we're actually above the POC here. on the structure. How did it work out yesterday? Yeah, so Tesla and Nvidia were trading very similar yesterday. I mean, Nvidia is actually pretty interesting because look where we're opening. We're opening above the POC, so we have this big push down. We have the battle at the POC. We fail. We push underneath the structure. Bears cannot get anything going. We get back over structure. The Bulls do their job of getting up to the Valley area high. Come back down, try to hold. Try to hold. Market weakness. Failure. Failure. Tries to get down to the Valley area low again to try to get back into the structure. And now we're creeping up above the POC again, which would make a case that this little sideways structure here is still battling and still holding the POC. So there could be a potential long here if we break the POC and crack back over. Then we look to get here. And then we could look to get, I don't know, back up here. We should look at the profile. Alright, profile from yesterday, we want to do that. Actually, trading with value on NVDA. So we're opening right underneath the POC currently, but we're over the alternative POC. And if we're looking for non-violated levels, there really isn't much until up here. But this level lines up perfect with the value area low. So this would actually be a pretty nice target. You can make a case that there was a little bit of structure like right here. You can see on this move up, you had this little 5 minute high or low. So like maybe a little bit of structure right here. But that's such a minuscule thing. Return on extended hours here. You can see what I'm looking at when it comes to, yeah, because look at that, came back underneath, a little bit of capitulation here potentially in pre-market, holds here, rejects off of the alternative POC. Once again, this volume doesn't mean too much to me, but you could see the story being told. Holds value area high, POC, holds value area, sorry, the low, POC, and now we're back above it here, trying to hold above it. So if we get like this like swoosh down, crack back over I mean, you could look to potentially go long off of that, looking to get back up here. Obviously, you want to break the POC and you want to break the value area high, but with that being said, we're trading with value here. As you see, we move value higher. So when you're trading with value, you could give a little bit more wiggle room of basically where you're opening within the profile. Like we're still inside of value. It's not like we're opening underneath the value area low. So it's a case where if QQQ does bounce, semis bounce, that Nvidia could actually be a pretty good long play. Even though we had this daily consolidation, the daily bounce starting with no follow through, you could chalk that up to the market being weak. And you can say, well, Paul, the market's still weak. And I say, yep, you're right. Bet your ass it is. So NVDA, Google, duplicate tab. So as of right now, we have NVDA long, Google short, depending on what we see from the indices here. We talked about Tesla again. Just to recap, Tesla is still gapping down, and we know where Tesla wants to get to. It wants to get to the low of this candle, and then get down here. Within this structure, it wants to get down here. As you can see, it didn't quite get down there, bounced off the valley area high, and now it's proceeding to go down again. So Tesla is still pretty weak, and you can look at this chart and say, when is this damn thing going to bounce? And it rejected from this level. You'd think that there would be some sort of bull interest in this level here, and it looked like there was here, which was odd for it to like for the interest to be here. It looked like just maybe aggressive bulls wanted to try to take control of the day. Clearly didn't work out, and now you would think that maybe they'd be down here or down here, and if not there, then maybe they finally fill the gap. Tesla is not looking too good. And then there was another one we were looking at that I don't want to forget about, which is Meta. Meta is also a bull play. Double inside bar, bounce off of this level here. So let's bring it to, we know it's double inside bar. Let's bring it in here. Oh, why is this like that? Intervals are, symbol should be same. Intervals are not the same. So we want to have that off. And also it's above the 50 on the RSI, which is good. I wonder if it's is, it's on both. That's good. We just want to make this today's POC. This is double inside bar, so we'd want to see, we'd want to just play the bull break. The market stays bullish. So we have Meta long. We're going to go NVDA here. this is the same problem as the last one. Symbol yes, interval off. See that we're teetering with the POC as we speak. And then we have Google. What the heck? Interval no, symbol yes. So Google is now flirting with the regular trading hours low. So maybe not a gap down anymore. Oh, 908. Wow. All right, so Google short, NVDA long, Meta long, but it really all depends on if we see QQQ find its legs and see some sort of rotation in the market. If not, we're really keeping an eye on all sectors being at the low at the same time. And that will be the real that'll be the real question. As we speak, the gap down is really not so much there anymore. So pre-market bulls trying to prevent a super weak open here, which would give me more of a it depends on what you're looking at, right? Like you could be like, oh, I want it to be as weak as possible, and then I'm gonna go long. But I don't know. Like that kind of psychology is it makes sense definitely if you're looking for daily higher lows from the this basically the scales to tilt auto one side, and then you get the big V shapes or whatever. But we'll see. We also have 10 a.m. news. All right, well, thank you for hanging out. Good luck today, and enjoy your weekend. Long video today. Well, bye.